In today's digital age, one of the most common questions I get from agency owners and CEOs is what happens if I get audited? It's a fair question because the number one thing the government will want to see is documentation, and that means receipts. But let's be real, no one wants to keep piles of paper stuffed in anything, not a shoebox, a binder, or an accordion file. And no one still has file cabinets, right? But here's the good news, physical paper is not required. There are 4 smart tech driven ways to keep the books audit proof without the stress and without the paper clutter. Hi, I'm Sherelle T. Martin, founder and CEO of Nitram Financial Solutions, where we teach bookkeeping without boundaries. We help CEOs and teams eliminate financial chaos, fix money leaks, and build scalable bookkeeping systems so that they can increase their cash flow and maximize their profits without overwhelm. Want to learn more? Be sure to like, comment, and subscribe. Now let's dive in. So tip 1, automate bank and credit card data for real-time accuracy. The first step to audit-proofing the books is to automate how bank and credit card transactions flow into an accounting system. Not just a simple bank fee connection. I'm talking about daily syncing, consistent categorization, and creating a complete traceable record of cash in and cash out. Here's why automation matters. Audit protection. Missing or late entered transactions can be a huge pain point. Automated syncing eliminates those gaps and saves time. Real-time visibility. CEOs need to know today, not 30 days from now, whether they can cover payroll or fund their growth. Fraud detection. With the automated feeds, unusual transactions or duplicates are spotted a whole lot faster. One of our clients came to us after being in business for 3 years, but wasn't using the banking connection. There were not only missing expenses that they could deduct on their taxes, but also customer payments that had not been applied properly. Once we got into their books and cleaned them up, they were able to see how their business was really performing financially and therefore make better business decisions. Tip 2, integrate business apps to capture the full story. Most businesses are running on a stack of tools, CRMs, a project management platform, or time tracking app. But here's the problem. When these systems aren't integrated with the accounting software, the financial story is incomplete, which means they're either re-entering data manually, which is time-consuming and error-prone, or they're relying on lump sum transactions in the bank feeds that strips out the details that they need. Both create blind spots, and blind spots don't hold up in an audit. Here's why integration matters. Accuracy. There are e-commerce and merchant processing tools that record gross revenue and fees separately, because without them, the books overstate income and understate expenses. By integrating the apps directly with an accounting system, you keep the details connected. Profitability insights. When time tracking is tied to projects, it shows when clients are profitable versus which ones are draining resources. Again, this allows an agency owner to see where the money may be leaking from out of their business. Efficiency. Allowing data to sync automatically cuts down hours of manual entry, freeing the time of the team to focus on higher level tasks, and higher level tasks means higher profits. This level of detail makes the books not just audit ready, but also decision ready, giving insight into exactly where money is coming from and where it's going, all the way down to the client or project level. Integrations make sure all the details, client payments, project costs, subscription fees, all flow through accurately, giving a complete financial picture. Tip 3, attach receipts digitally to secure every deduction. Now let's talk about these pesky receipts. The IRS doesn't care what the bank statement says. Without receipts, deductions are at risk, and disallowed deductions mean higher taxes. Attaching receipts digitally ensures every transaction has its proof attached in one place with no paper clutter. Here's why attachment matters. Audit defense. Clear, legible receipts linked to transactions are fully IRS approved. Statement details often leave out information that auditors want to see. Time savings. No more hunting for paper or email threads when documentation is needed. Simply go to the transaction in the accounting software and the support is right there. Cash protection. With receipts, every expense stays deductible. This means that more money stays in the business, which increases cash flow and profitability. There are 3 easy ways to do this. Snap a picture with the phone using the accounting app's mobile feature. Forward email receipts to a dedicated address that syncs with the books. Upload PDFs or scans straight from the computer into the software. As long as the receipts are legible, digital records are 100% accepted. The bonus? You'll always have everything stored in one place. connected to the exact transaction it supports. No more digging through boxes and no more panicking if you're asked to prove an expense. Tip 4, implement document management and audit trails for transparency. Audit proofing isn't just about having receipts. It's also about having an organized system where you can find them instantly. Yes, attaching receipts in the accounting software is best practice, but many CEOs don't want to log into an app every time, so we also set up digital filing systems that mirror the books. Over the years, we've used tools like HubDoc, Dex, Dropbox, and Google Drive to provide the structure that we need to store, tag, and link every piece of documentation, whether it's receipts, invoices, contracts, agreements, all of it, so that they are always at our fingertips and the client's. Here's why it matters. Centralized access. All financial documentation is in one place, accessible to both the CEO and the finance team. Audit transparency. Audit trails provide a digital fingerprint showing when a document was uploaded and by who, edited, and what transaction it is tied to. Risk reduction. With a clear audit trail, there's no second guessing, and that proof is what auditors love. Think about it this way. A receipt proves the expense, but the audit trail proves the integrity of the records. That combination takes the books from compliant to rock solid. So let's review the 4 smart tech-driven ways to audit-proof the books. 1, automate the bank feeds. Remember, this isn't just about convenience. It ensures accuracy, real-time visibility, and catches issues before they become expensive problems. 2, integrate apps. Don't settle for lump sum data or manual entry. Connecting tools gives you the full financial story down to the client and project level. 3, attach receipts digitally. Bank statements aren't enough in an audit. Keeping digital receipts tied to each transaction secures deductions and saves hours of stress later. 4, use document management and audit trails. This is where a system goes from compliant to rock solid, providing transparency, trust, and peace of mind. Follow these steps and you have clean, organized, audit-ready books. If you're new to bookkeeping and looking to connect with other Rockstar bookkeepers, click the link in the description to join my Rockstar Bookkeeper community with other career professionals looking to build a career or business in bookkeeping. If you're an agency owner and feel like your accounting processes are a bit janky, then I invite you to book a financial clarity consult where we will review your processes and your numbers, uncover hidden leaks, and build your custom workflow plan. The link is in the description down below. What did I say? The floor? That's all I have for you today. Take care, guys.